Microsoft is lifting Nasdaq futures this morning, but the rally faces an immediate test from GDP, inflation, and jobless claims data at 8:30 Eastern Time. This is the pre-market update for Thursday, July 30th, 2026, updated at 7:30 Eastern Time. The overall market bias is cautiously bullish. S&P 500 futures are higher by approximately 0.56%. Nasdaq-100 futures are leading with a gain of about 1.24%. Dow futures are up approximately 0.36%. A reliable synchronized Russell 2000 futures quote was not available. The biggest story is Microsoft. Microsoft shares are up approximately 9.6% after the company reported quarterly revenue of about $90 billion and earnings of $4.81 per share. Both figures exceeded expectations. Azure grew 43%, and Microsoft expects cloud growth of approximately 45% in the current quarter. The company also reported nearly $20 billion in free cash flow and told investors it expects to continue generating cash despite major artificial intelligence infrastructure spending. That message matters. The market has spent several weeks questioning whether AI investment is creating sustainable returns. Microsoft provided evidence that strong cloud demand and disciplined spending can produce both growth and cash flow. Meta delivered the opposite message. Meta shares are down more than 9%. Revenue rose 28% to $60.8 billion, but earnings missed expectations. Free cash flow fell 91% to only $784 million as capital expenditure surged. Meta now expects to spend between $130 billion and $145 billion this year. The contrast between Microsoft and Meta is shaping today's market. Investors are rewarding visible AI monetization and punishing companies where infrastructure costs are expanding faster than cash flow. The next major event comes at 8:30 Eastern Time. The government releases second quarter gross domestic product, personal income, personal spending, headline PCE inflation, core PCE inflation, and weekly jobless claims at the same time. Second quarter growth is expected to remain near a 2% annualized pace. Headline PCE inflation is expected to decline on a monthly basis after rising 0.4% previously. Core PCE is expected to rise 0.2% for the month and approximately 3.3% from 1 year ago. Initial jobless claims are expected near 200,000 after the prior reading fell to 187,000. A hotter inflation number could push Treasury yields sharply higher and reverse the technology rally. A softer number could support Nasdaq futures, gold, and rate-sensitive growth stocks. The 10-year Treasury yield is near 4.69%. That remains a major valuation headwind. The 30-year yield has reached its highest level since 2007, following the Federal Reserve's decision to leave rates unchanged. 3 policymakers voted for a rate increase, and markets now see roughly a 65% probability of a quarter-point hike in September. West Texas Intermediate crude is near $83.64. Gold is trading near $4,077. The dollar index is near 100.71, and Bitcoin is around $64,700. The earnings calendar remains extremely active. Qualcomm is down approximately 5.3% after forecasting weaker than expected profit and warning that Apple-related revenue will decline faster than expected. Arm Holdings is down around 5% after warning that smartphone royalties will decrease in the coming quarter. Starbucks is up more than 7% after raising its annual sales and profit forecasts. Chipotle is up approximately 5% after increasing its annual sales outlook. Bristol-Myers Squibb reported adjusted earnings of $2.04 per share, well above expectations. Revenue reached nearly $13 billion, and the company raised its full-year revenue and profit forecasts. After today's closing bell, Amazon and Apple report earnings. Amazon investors will focus on AWS growth, artificial intelligence infrastructure spending, retail margins, and free cash flow. Apple investors will focus on iPhone demand, services revenue, China, and the company's artificial intelligence strategy. In semiconductors, Nvidia is up approximately 1.7%, Micron is up more than 3%, Intel is higher by just over 2% on almost 3 million shares of pre-market volume. 3 stocks deserve the closest attention. The first is Microsoft. It is the main driver of the Nasdaq rebound, but the large gap creates significant reversal risk if inflation is hotter than expected. The second is Meta. Its 9% decline represents the clearest warning that investors will not tolerate unlimited AI spending without cash flow support. The third is Qualcomm. Its weak forecast and declining Apple revenue outlook could pressure smartphone and mobile semiconductor sentiment. The biggest market risk is a hotter PCE inflation reading that pushes yields higher and reverses the overnight technology rally. The strongest market catalyst is Microsoft's evidence that artificial intelligence investment can produce strong cloud growth and sustainable cash flow. The opening strategy is to wait for the 8:30 data. Watch the 10-year yield. Mark the pre-market high and low. Let the first 5 to 15 minutes establish direction. Use smaller positions in large earnings gaps. Define the stop, target, and maximum daily loss before entering. Do not chase the opening move simply because Nasdaq futures are higher. This is market before the bell. Trade with a plan, control your risk, and never chase the opening move.